Hey fellow crypto enthusiast, welcome to today's quick trend analysis. Let's get started. By taking a closer look at the hourly time frame for Bitcoin, the price went down only slight by about 0.7% in the last 24 hours and has a current price of $7,130. Moving to the exponential moving average, or short EMA, it is calculated in a similar way as how the simple moving average is being calculated, but places more importance on the most recent data points. A faster trend change could be signaled as the EMA moves quicker in the current direction of the price. In order to show the trend more accurately, the ribbon we are showing is made up of 8 different EMAs. Now looking at the current hourly exponential moving averages, at the moment, the price is in the hourly ribbon, so you should see if the ribbon could hold support, currently at around 7,083. The ribbon is relatively spread out, so the support should be considered. Jumping to the divergences, there are 2 types of divergences, bearish or negative divergence and a bullish or positive divergence. Bearish divergence is when the price is making a higher high while at the same time the indicator is making a lower high. This shows that the buyers are exhausted and a trend change could be expected soon. The same logic applies to the bullish divergence, where the price makes a lower low, but the indicator is making a higher low, showing that the sellers are exhausted. Now looking for divergence in the hourly time frame, the price has already gone up owing to the bullish divergence. Moving to the stochastic RSI, it shows similar to the RSI overbought and oversold conditions, but moves quicker up and down to improve sensitivity and generate a greater number of signals. It consists of 2 lines, the %K and %D lines. The %D line is a moving average of the %K line, so it moves slower. Cross points between the 2 lines could show a trend change. When we now look at the current hourly stochastic RSI, there are no signs of the stochastic RSI being oversold or overbought at this time, but we can see that the trend is currently going down because the K line is below the D line. Next, looking at the moving average convergence divergence, or short MACD, it uses 2 moving averages, usually the 12-period and the 26-period moving average subtracted from each other to create a single line, the MACD line. Usually, a second line, the 9-period EMA, is used as a signal line. You should keep an eye out for these 2 lines crossing, which will indicate a trend change and trigger a signal to buy or sell in the respective direction. If we now look at the current hourly MACD, the trend is currently going down because the MACD line is below the signal line. The momentum is currently indecisive, according to the MACD histogram. This means you should wait and see if the MACD line will cross the signal line, which will be bullish, due to the expected shifting momentum. Moving to the 3-hourly exponential moving averages, the current price went above the 3-hourly ribbon, so it is to see if the price will dip back below the ribbon or it will play as a support to the downside, currently at around 7,084. Looking at the 3-hourly stochastic RSI, the stochastic RSI currently shows no overbought or oversold conditions, but the %K line is below the %D line, which means the current trend is on the downside. Jumping to the 3-hourly MACD, seeing as the MACD line is above the signal line, meaning that the trend is currently on the up. However, the MACD histogram shows that the momentum is currently shifting to the downside and it could be expected that the price will consolidate, and it is better to wait and see if the MACD line will cross the signal line, which will be bearish. In general, the larger time frames have a greater impact on the price, so please remember that when we display different time frames with different indicators. And also the shorter time frames are only representative for the short-term trading. Thanks for watching, but you should know that trading with cryptocurrencies is very risky, and these videos are only an overview of what happens with the price and a pure technical analysis without considering the fundamentals. So you should read more and make your own investing decisions. See you.